Hey, it's Travis Anderson here with Keller Williams Realty. Hey, it's Travis Anderson here with Keller Williams Realty, and I have one of my good friends, Peter Lindquist, with me. He's going to help us understand a little bit about what's going on with the mortgage industry. You know, we've spent the last few weeks looking at real estate metrics, specifically things like actives, pendings, and showings, and Peter's going to lean in a little bit on the mortgage industry. So, Peter, thanks for being here today.
Absolutely. Thanks for having me, Travis.
I'm going to start here, Peter, and then I'm going to kind of leave it up to you. So I want to give my weekly market update. As far as buyers buying real estate, it's the same. We had 1,638 transactions in the Twin Cities over the last 7 days. The previous week was in that 1,600 range as well. So we still have had 1,600 plus people buy a home over the last 7 days, which I find completely fascinating. And then in addition to that, we had 2,197 new listings hit the market. So I kind of was worried a little bit as we were entering the shelter in place, right? And I didn't know what last week would look like because it would have been the first full week where we're sheltering in place. And somehow the market still is responding and still active. And at least the data that I'm looking at directly from the MLS, people are still buying, people are still listing their home. I think there's some optimism there. Again, the biggest thing that we don't know about, of course, and Peter is going to help us understand a little bit of how this is affecting the mortgage industry, but it's the job market, right? If the job market gets affected directly, it's going to indirectly affect us, and it's just a matter of time. The other thing I wanted to say is I watched a video the other day from one of the number one realtors in our market. And as I was watching the video, nearly 70,000 people had watched the video. And one of the things that this agent had said is that people are not looking at houses anymore. They're doing everything online. And I'm just going to share with you, there were 18,000 showings over the last 7 days. 18,000 showings. So to say that people aren't going into homes anymore, it's just not true. I do think that people are being more proactive, right? They're doing a little more due diligence up front. They're watching videos. They're making sure they read the description and everything. Maybe they're looking at 6 to 8 homes. And 18,000 people walking through homes is evidence to show me that people are not just buying real estate in front of their computer. And to give you some perspective, that's actually up from the previous week. We're up about 8%. So 8% more people looked at homes when we're supposed to be sheltering in place than did the week before. And so I do believe that things are changing. And the reason I'm doing a weekly video, and Peter, I know that you've watched a couple of the videos, but the reason I'm doing a weekly video is because I can't predict the future, right? And my best understanding of the market is kind of a weekly snapshot of what people are actually doing. So that's all I have, Peter. I mean, people are still buying, people are still selling their homes. And then of course, nearly 18,000 people had showings last week. So that's my market update from the realtor side. You know, Peter, why don't you give us an update? What's going on in the mortgage world?
Yeah, so it has been rocky and rolly a couple of weeks in the mortgage world, particularly as it relates to mortgage programs. So I want to talk to you a little bit about programs, rates, and kind of what you might expect. So mortgage programs are under a lot of pressure. Mortgage originators are. And so we're seeing guideline changes happening at a very fast pace. And what I'd like to encourage people is that if they've been pre-approved anytime before, let's say last Thursday, they should be checking in with their lender to see if they're still pre-approved. The good news is that for borrowers who have saved their own down payment and have credit scores above 700, probably they're going to find that there was no change. But for borrowers that were looking at minimum down payment programs, down payment assistance programs, or have credit scores under 680 in particular, the programs are either modified dramatically or they're gone. And it's happening like that. And so it would be a good idea if you were pre-approved under those kind of circumstances, check in with your lender, see if you're still pre-approved. I've been reaching out to a couple of my past clients or my pre-approved buyers and telling them, here's what just happened, and here's what just happened to your program. So now, if you are in that group of people that have saved their own down payment, better credit score, the great news is interest rates are incredibly low. And so right now is a great time to buy because you're going to be able to get some kind of crazy rates. Now, that being said, rates are extremely volatile. So it's not even worth talking about rates. Even if I could mention rates, it's not even worth talking about it because when I'll send quotes to a customer, and now my new tagline is, by the time you are reading this, these interest rates are no longer valid. And I'll just say, we need to talk about this. And if you want to take action, we've got to take action right now because they've really changed a lot. A couple of weeks ago, we saw rates swing by 1.5% in the same day, and then come down like 0.75% the next day. And right now, there's been comparative stability, but it still is changing very rapidly. So if you're in a position where you're buying a home or refinancing a home, get your rate locked, and don't worry about thinking that rates will fall to 0% at some point, because that ain't gonna happen. Just get it taken care of because things could change on you real quickly.
Right. I've got a couple of questions for you. How long have you been in the industry?
29 years.
29 years. That's a long time in the industry. When was the last time you mentioned the programs changing dramatically, and they're changing all the time is not the right word you use, but they're changing often. When was the last time you saw programs change this rapidly?
2008. So mortgage crisis, I remember that very distinctly as emails coming out that were just, this program is gone, this company is out of business. And we are seeing those same kind of emails. And the interesting thing on my end of things is that because I worked through that, lived through it, it's not as shocking. It's like, okay,
right.
Well, this is what happens in this kind of environment, and so let's just deal with it, right? So,
yeah. So essentially, what happened since 2008, and I'm going to speak very much like I have no clue what's going on, and that's why you're here, because I don't know what's going on in your world nearly as much. So, in lay terms, after the crisis, lenders started to loosen their requirements, right, to allow for more home buyers to qualify for mortgages, right? Yep. And that happened over the course of a decade. And then now we hit another crisis of some sort. And then the lenders are now pulling back in those requirements and tightening back up. Is that what I'm hearing?
Yeah, absolutely. People lose their jobs due to COVID-19 related kinds of issues. They can't make their payments. So sure. That's a big deal. So there's a lot of pressure right now that wasn't so much the case back in the mortgage crisis days. It's a lot about, is your borrower employed at the moment the loan closes? And so we have to be even more diligent about those verifications. And those verifications come a little tougher because a lot of HR departments are working at home. So we right. need to try to find who can we contact. So some different challenges that way.
Yeah, very interesting. And every borrower has their own set of challenges. And my assumption is that when they do their application with you, you're going to have a pretty good idea of what it looks like at that moment in time. And then you're going to be their pulse as time moves on. Is that the best way to put it?
That's very true. We want to make sure that the program is still in existence. And if we go back to the mortgage crisis, there were loans that were in process that the investor went out of business in the middle of the process. And so we couldn't actually close that. It's less likely to be the same problem that we'll run into today, but without a question, before you're writing that offer, check back in with us before writing the offer, just to see how different things are.
Yeah, that's another reason why you have a really good mortgage broker too, right? So you can help prepare for some of these things. I had one other question. It's about interest rates. It sounds like, so before we dive into that, it sounds like you probably can't talk a lot about interest rates. Is that correct?
Yeah, there's just so many regulatory guidelines, but even if I could, whatever I tell you now, 5 minutes from now, it's going to be different. So
Yeah.
What's the point?
Yeah, I think so. Let's see. I'm going to ask you the question and see if it works. And if not, we can, we may not use it. We'll edit it out. When you're talking about big swings, so interest rates adjust on an everyday basis, right? So in a normal scenario, like last year, middle of the year, let's say, interest rates during the day were different prices at 8 a.m. as they were at noon, as they were at 5 o'clock. That's typical of a day, correct? Interest rates can go up and down. Okay. And so then when you're saying interest rates are volatile today, in other words, that fluctuation during the day can be a bigger swing than normal. That's what I'm understanding, correct?
So most commonly in a stable market, rates come out at around 10 o'clock and they're the same throughout the day. Occasionally you'd have a price change in the middle of the day, but it was modest. Now we're seeing 3 to 4 price changes during the day, and they can be very significant. They can be a half of a discount point, which might relate to 1/8% in rate, for example. And that might sound small, but in the mortgage world, that's really big.
Mm-hmm.
And it might be the difference between, oh, I should lock or I shouldn't lock based on what just happened.
Right. Yeah, that makes sense. Because it is interesting when we talk about interest rates. If I were to lock in today and things were to change, you're as a lender is basically taking the risk on that if it changes in the wrong direction. That's correct too, isn't it?
That is correct.
Your phone is blowing up. We should make this we'll have to wrap this up, Peter. I think that's about.
Let's do it at 7 a.m. next time.
It's about all that I have. I mean, I think that it's really helpful to have somebody with your expertise provide a little bit of perspective on the mortgage market. Is there anything else that you think would be beneficial for, my customers, your customers, prospects to know?
I'll just tell you one thing, only because it's kind of funny. So you asked how long I've been around, 29 years. So the last time rates changed by 1.5% was 40 years ago.
Oh, wow. There you go.
So it's like before me. So
in a 24-hour period, you mean, right?
In a 24-hour period, yeah.
That is fascinating. I'm 39 years young, so about when I was born. Yeah.
About then.
Yeah, that's awesome. Well, Peter, I really appreciate it. We can do this anytime you want. We'll set it up, and maybe next month or something we'll do another version of this so we can update clients as we navigate the market.
That sounds great, Travis. Thanks for having me.
Yeah, thanks for being here. We'll talk soon.
Yep, bye.